Good afternoon. I'm coming to you from Washington, D.C. Thank you for inviting me to speak at the Crypto Policy Symposium. I'm Congressman Brad Sherman from California's best named city, Sherman Oaks. I happen to be chair of the Investor Protection and Capital Markets Subcommittee of the House Committee on Financial Services, a full committee on which I've served for a quarter of a century. I'm also the Democratic chair of our small but mighty Congressional CPA caucus. I've been a crypto skeptic from before the recent significant decline in Bitcoin and Ethereum. In fact, I've been a Bitcoin skeptic and a crypto skeptic for a long time. I'm pleased that the organizers of the Crypto Policy Symposium have worked to bring together those who are focused on the many risks to our societies posed by cryptocurrencies. The crypto bros are spending tens of millions of dollars in Washington to make sure that the industry is regulated as lightly as possible. I assume they're focused on London and elsewhere. They've thrown money around to small and poor countries like El Salvador and the Central African Republic. This is not surprising because a few hundred crypto oligarchs make money by literally making money. If cryptocurrency is recognized for what I think it really is, the pet rock of the 21st century, a scheme that would make Mr. Ponzi blush, then they stand to lose the better part of $1 trillion. If they can hype crypto to where it was last September, they make $2 trillion. And if they achieve their goal of creating a real world currency, then they stand to make tens of trillions. They have a lot riding on this, and they're willing to spend billions to make trillions. I'm particularly incensed that these billionaire Bitcoin bros try to picture themselves as the poor, the downtrodden, as Robin Hoods working to distribute wealth to the unfortunate. Having hard-working people, particularly people of color, send their money to these tech billionaires is hardly a way to stick it to the man. Unfortunately, perhaps there are no lobbyists dedicated to preventing tax evasion, sanctions evasion, and other forms of illicit finance that cryptocurrency enables. There are no political action funding committees focused on preventing bankruptcy fraud or hiding assets from soon-to-be ex-wives or husbands or from tax collectors. That's why it's more important than ever to bring together finance, technology, and policy experts who share a healthy skepticism of the many extravagant claims made by the proponents of cryptocurrency. So again, I would like to thank Martin Walker and our other hosts for convening this important conference. I'm a crypto skeptic for many reasons, and I'm sure that many of you listening are as well. There's a wide array of issues that should concern market participants, lawmakers, and regulators. These troubling issues cover areas like the Know Your Customer, anti-money laundering laws, and the reduction of the clout of the U.S. dollar, the possible illicit financial uses, the environmental impacts, and the lack of any real tangible benefit to the world, let alone the United States, from cryptocurrencies. The first question we should ask is, what is crypto? Crypto is many different things. Cryptocurrencies are an incredibly volatile investment that aspires to be a currency and aspires to be a currency that competes with the U.S. dollar. Investors are told they can double or triple their investment in months, if not a year. In contrast, stablecoin aspires to be a money market fund, pegged to exactly mirror the U.S. dollar, but too hip for those who don't want to invest in their father's money market fund, which is subject to all that old-fashioned regulation. So what do a triple your money scheme have to do with a pseudo money market fund? They both share a culture, a stick it to the man moniker, a belief that somehow this is new and hip, an attack on the powers of society. Undercutting this ragtag band narrative is the fact that behind it all, Wall Street, including Goldman Sachs, JP Morgan, Visa, BlackRock, Citadel, Musk, and until recently Zuckerberg, are all trying to make billions from their investment in crypto world. Crypto is a thing that you can bet on. Your short-term bet is that you can sell your crypto to somebody else who will pay you more for it. Your long-term bet is that crypto will become a major international currency. Crypto is not currently a currency. It's not a stable store of value. It's not a measure of value. Even if a Tesla is priced in dollars, it's not, you don't measure its value in Bitcoin or Dogecoin. Crypto is not an effective medium of exchange. Nobody watching this can walk out their door and buy a sandwich for crypto without first converting the crypto into dollars or pounds. The cost of anything, of a Tesla, for example, is always stated in dollars or pounds or wherever you happen to be. Regulations require banks, retail investors, and other financial companies that work with U.S. currencies to follow the Know Your Customer laws. Know Your Customer laws require financial institutions to establish the legitimacy of the customer's identity and to identify risk factors that there may be illicit finance. These laws help those who are trying to enforce our tax laws and our other laws. Know Your Customer exists at the trading level and investing level, but ultimately these Bitcoins and Ethereum coins are supposed to become a currency. So you can transfer it to your individual wallet, where it can be totally anonymous, doesn't require proof of identity. Some crypto wallets do, but then you can transfer it to an anonymous wallet. For crypto to become a currency that has an advantage over fiat currencies, you have to identify what that advantage is. It's certainly not an inflation hedge, as recent events have shown. The selling point of cryptocurrency is the name. Cryptocurrency literally means hidden money. And there's a trillion-dollar, multi-trillion-dollar economy out there that seeks that advantage. What is crypto good for? Let's first compare it to the U.S. dollar. The dollar is an excellent currency. It serves financial needs for just about everybody. It's a relatively stable store of value. It's a measure of value. But it fails to meet the needs of tax evaders, sanctions evaders, drug dealers, those who are planning to cheat financially in a financial or marital situation, and terrorists, and of course those who want to violate our campaign financial disclosure laws. This unmet need can be met by a new currency that prides itself on anonymity. If we make drug dealers just 10% more effective and efficient, how many more deaths will we see? How many spouses who are hiding assets from their partners can we facilitate? Look at some of the illicit financial headlines from just the last few years, and this is before crypto became a real currency, which it only aspires to be. According to a report from the U.S. Treasury Department released in May 2021, cryptocurrency already poses a significant detection problem by facilitating illegal activity broadly, including especially tax evasion. On September 28, 2021, Virgil Griffith, a former senior researcher with the Ethereum Foundation, pleaded guilty to charges from the U.S. Justice Department of providing advice to North Korea on using cryptocurrency and blockchain technology to avoid sanctions. Iran, using the oil that sanctions does not let it export, has built a Bitcoin mining industry, which is now 4.5% of all Bitcoin mining in the world. It has, with the help of Chinese firms, produced over $1 billion in Bitcoin and undercut American sanctions, leading to support for its nuclear weapons program. According to blockchain analysis firm Chainalysis, the Lazarus Group is believed to have stolen more than $1.75 billion of cryptocurrency in the time it's been active. Experts believe that proceeds from the Lazarus Group hacks go to North Korea's nuclear weapons program. Those who advocate for cryptocurrency should pause and wonder what effect they'll have on the power of the United States to impose sanctions if crypto becomes an effective world currency. One more example, in 2019, Turkey stopped its incursion into Syria at the 20-mile mark, not because of the threat of U.S. military force, but because U.S. sanctions were threatened, and they were strong because of the important role of the U.S. dollar. We stand to lose this power if cryptocurrency achieves its stated purpose. And yet, cryptocurrency is supported by those who I call patriotic anarchists. While blockchain records are maintained forever, they're maintained anonymously, and therefore they are a perfect tool for underpaying taxes. Already we see the top 0.5% of cheating to the tune of $600 billion a year just on U.S. income taxes. In order to do that, you need to hide about $1.5 trillion of taxable income. And that means over a decade, you've got $15 trillion of assets to conceal. That's the big market for cryptocurrency. Next, we need to discuss the terrible and outsized environmental impact of cryptocurrency. Bitcoin's estimated power consumption soared from an annual rate of 6.6 terawatt hours at the start of 2017 to 138 terawatt hours in early 2022. More than the whole country of Norway, according to the Cambridge Center for Alternative Finance, which keeps a running estimate. In 2020, the U.S., where over a third of the Bitcoin mining takes place, ever since China banned cryptocurrency mining, we create 0.85 pounds of carbon dioxide per kilowatt hour. That results in 40 billion pounds of carbon dioxide produced by U.S. Bitcoin mining alone. According to the National Resources Defense Council, a single Bitcoin has the same carbon footprint as 330,000 credit card transactions. In recent months, we have seen reports of several coal-powered electric plants that had been closed down being reopened in the United States just to power cryptocurrency mining. As chair of the Investor Protection Subcommittee, I'm concerned that investors have no protection from the manipulation of cryptocurrency. I shake my head when I see a pension fund manager for a county just outside Washington, D.C., investing in cryptocurrency, especially after the collapse of Bitcoin and Ethereum prices and their incredible volatility. A Canadian pension fund just took a $150 million write-off due to the collapse of crypto lender Celsius Network. It concerns me that poor, small countries like El Salvador have involved themselves in cryptocurrency, and El Salvador now faces a debt crisis. Will governments stop crypto by requiring all their users to do business only with exchanges that ban all transactions with anonymous wallets? Well, that would eliminate the only real advantage that crypto has and cause crypto to be swept into the dustbin of history. The real threat to crypto is crypto. Fiat currencies draw their strength from the country that mints them. The U.S. dollar will always have a capitalized value, many times that of the Uruguayan peso, because the United States will always be a larger economy than Uruguay. Bitcoin may or may not be worth more than Ethereum. Will Bitcoin always be worth more than hamster coin? We don't know. The Uruguayan peso will always have at least some value because there's always going to be an Uruguay. Will hamster coin always have some value? What about Cobra coin? And although a mongoose can defeat a cobra or a hamster, I believe that mongoose coin, a coin that was created as a result of a joke I told at a hearing, is, I believe, now worthless. How can Bitcoin be sure to continue to have value if it is not objectively and inherently more value than thousands of other coins, some of which are self-trivializing jokes? The U.S. is powerful because of the role the dollar plays as a major reserve currency. That fact saves every American family thousands of dollars in interest costs. It builds the American economy, and it gives America more usable international clout than a dozen aircraft carrier groups. The announced purpose of crypto is to take this benefit away from American families and to take this power away from the United States, all while transferring wealth to crypto oligarchs. I'm opposed. I think anyone looking out for America or the international world order would be opposed. But anybody familiar with the role of money and power in politics would see that the money and power that crypto has conferred on its oligarchs should not be underestimated. And that is why our governments have not taken adequate action. Here in the United States, the crypto oligarchs have spent tens of millions of dollars on lobbying and many, many millions more on their candidates. They couldn't get themselves organized in time to be effective against me this time. They tried. I remain a crypto skeptic. I'm Congressman Brad Sherman.